Why this financial planner sold everything in Canada and moved his portfolio to Ohio. Carlos Rodrigues is an old friend of mine, a seasoned entrepreneur and former financial planner who left behind a 20-year career, including ownership of his financial and mortgage brokerages, to go all in on U.S. real estate. After growing frustrated with Canada's tightening lending rules, anti-landlord policies, and the sheer grind of compliance work, he sold everything in 2019, including his Ontario rental portfolio, and moved his investing focus to Cleveland, Ohio. There, he now specializes in high-yield cash-flowing properties with a focus on Section 8 rentals. For those who don't know, Section 8, that is the U.S.'s affordable housing, subsidized housing program. But Carlos didn't find success overnight. In true truth about real estate investing fashion, he shares the ugly parts too, like how his first Ohio property manager stole $30,000 from him and vanished. Then also there was how brutal it is to find trustworthy, proactive team members in a market with zero margin for error. He also breaks down lead paint certification hurdles, evictions, Section 8 pros and cons, which is again subsidized government housing, and how DSCR, which stands for debt service coverage ratio mortgages, lets you invest without using your personal income to qualify. Today, Carlos helps Canadian investors who are fed up with Ontario's red tape to get started in the US. He offers mentorship, boots on the ground tours, and joint ventures. You can follow him on Instagram at CashflowCarlos. And also I have all the links in my show notes for all his other social media. Or you can grab his book, Property Profits, on Amazon. Just search the title, Property Profits, or his name, Carlos Rodrigues, and you'll find him. If you want the unfiltered truth of being a Canadian who is full-time investing, hands-on, from the ground up, building a portfolio outside of Canada in the US, this episode is for you. Please enjoy the show. Carlos, thanks for coming in to do this.
Thank you for having me.
What's keeping you busy these days?
Ohio, lots of real estate. Things are changing down there, so it's an evolving beast. You know, you gotta constantly be down there and seeing what's what. Tariffs haven't really affected what's happening with Trump and all this. That right now it hasn't really made its way to the real estate market in Cleveland anyways. Right now, frankly, I'd say it was a seller's market in Cleveland with all of the people that are starting to realize what the Midwest has as far as nicer prices than Canada, what we have here in Ontario. You know what I mean? The difference in the currency, just bringing profits over the border. Right now, I mean, it's an easy 43% bump, right? So, it's an interesting market. It's a lot different than up here. You can't just pick a property. We've been kind of blessed these last 20 years or whatnot. You could pick whatever you want, and it could be profitable. Right, and down there, not so. I mean, they've got a lot of urban sprawl. You know what I mean? Sections of the city that are quote unquote up and coming, but then you go over a block and you don't want to touch that at all. You know what I mean? You could end up buying a money pit. I mean, I almost did it on my first one. That I bought down there, and but it was a learning experience, and I'm grateful for it. The house is making money now, but if I had to go back and see if I buy that one, I'd probably kind of steer away from it.
And so again, thank you for coming in, because I know you literally have an appointment with an investor to take them to Cleveland right immediately after this.
Right after this, head to Cleveland. 5-hour drive. Depending on how good the music is, right? So,
and the conversation, hopefully.
Yeah.
So take us back. Like, you used to be a financial planner full time.
Yeah.
55.
I started at Freedom 55 in 2003, and I left. I was there for 10 years.
2003. That's an interesting time. It was right after the dot-com bubble burst.
Yeah. I mean, a lot of the first clients that I was meeting I mean, I was an investment guy when I first started, for actually throughout my career for the most part, and you'd see people's portfolios, and it was literally up and down. So kind of it was an interesting time. You know, people were scared at that point to get back into the market, but eventually,
So that kind of rhymes with right
yeah,
now.
yeah, true enough. I mean, it I started on the bottom end, and it was almost fortunate because everybody that I would speak to, even though there was some fear, it was much easier to look like a rock star, building portfolios that were consistently moving up, right? But then 2008 hit, and everything, took a dive again.
Yeah.
But I was fortunate that with what I was doing, it didn't really affect me, right? So, but yeah, started in 2003. I left Freedom 55 in 2013 to open up Magellan Wealth Management, which was my own brokerage. I went independent at that point, so didn't have anybody dictating what mutual fund or what insurance I could sell, which really opened up my eyes to what was out there.
Can you elaborate on that? How would they dictate? Like,
Well,
and why was there disagreement on what they dictated and what their preferences were?
all the like Freedom 55 at that point was rebranded from London Life, right? So when you came on, they paid for your training and whatnot to get your licenses, with a little bit of a stipend as well. But part of the contract was you could only sell London Life, Great West Life, and any life insurance company that they had an agreement with. So at that point, I think it was Manulife. So those were the only companies. We couldn't go to the rest of the market.
Right. And no real estate.
And definitely no real estate. Well, that I mean, I could, but it ended up causing some ruckus near the end of my term with Freedom 55. But in the office that I was at in Burlington, there were, I believe, close to 80 agents in that office, and I was somewhere in the top 10 at that point. But then when I started, realizing what real estate had to offer and was talking about that to my clients, this is closer to, the 10-year mark that I was there. I dropped significantly in my standings down to like the bottom two because I just couldn't sell that stuff. It's like telling people it's caviar when really it's garbage. As far as the investments were concerned, and in what it could do, right? I've always tried to take the approach that financial products are not bad or good. It's what's appropriate, right? It's like a carpenter with their tool belt. You're not going to use a sledgehammer and a carpenter's hammer for the same thing, right? So, I mean, sure, everything might have its place,
Yeah.
but when it comes to creating wealth and
Diversification.
yeah, absolutely, diversification, there were a lot better things out there than mutual funds and segregated funds, and I only realized that.
Insurance.
Well, I mean, it has its spot as an investment. I don't know. I'm still kind of on the fence about that, but does it have its uses? Absolutely.
Yeah.
Estate planning and things that need passing on different assets to your kids in a tax advantaged way. Maybe stuff like what's it called? An individual pension plan, right? I mean, stuff like that. It comes in handy for those who have the cash to pay for it, right?
Yeah, because we and I were discussing this over coffee the other day. I was saying when whole life insurance was first introduced to me, my friend was paying $1,000 per month each for her and her partner.
Hmm.
So it's $2,000 a month that they're paying.
That's a fairly substantial policy, yeah.
Yes, and not like what percentage of Canadian households can afford a thousand each parent to for something like it's not something that's that common.
Yeah.
And I think that's why a lot of people hadn't heard of it. But I've said on the show many times. I should have told you the other day was I said, in what financial planner in the world would tell you to have all your assets, all your income, all your cash flow, all your denominated in one currency in one country, right? Like even like when you're doing financial planning, I imagine it's still best practice to diversify. Like your mutual fund, for example, would have some in different countries, for example.
Yeah, absolutely. I mean, you try to. I mean,
see Buffett now buying stocks in Japan, for example.
yeah. I mean, but the ideal situation was, the mindset was if you had, a pool of funds, for every one that's going down, you'd want one or two going up. You know what I mean? To take up that space and always have that kind of. The ideal situation is always moving upwards, right? But how realistic is that?
Right.
It's very difficult to achieve depending on the time.
Right.
Hey, it's that's what we strive for, right?
Now I'm not a financial planner. I've never said I was not a professional in this space. And then my same thought process was, why should all my real estate be Canadian?
Yeah. Funny thing is that I only really realized that when I couldn't get my last mortgage.
What year was that?
Here in
Wait, you're a mortgage professional.
well, yeah, and that's the thing. I mean, more so for raising capital, at that point. But I did have a mortgage brokerage as part of my offering when I was an independent financial planner, and I had a few people working for me on that side. But I had that brokerage more so for raising capital for different developers. And I never liked doing the mortgage origination myself, just because of how I felt the industry was set up, and dealing with different lenders and whatnot. It was just kind of
right. So sorry for the listeners' benefit. Mortgage origination would be helping people. You're brokering mortgages between investors and the lender.
Right. Exactly.
Right. And lenders could be like Schedule A banks, home trust, that sort of stuff. Like
exactly. And so I would always kind of give my own business. If I had to refinance my mortgage, I would give it to one of my guys to look that up. And I was working with another agent at that point, and he comes back and he's like, Carlos, keep in mind, this was my most successful year ever. And he comes back to me and he says, Carlos, I can only get you a mortgage that's fit for somebody in their 70s looking for an income.
A reverse mortgage,
you're saying? Mortgage. That was the only thing apparently I could qualify for at that point. I was like, what? How is that even possible?
It's a very expensive mortgage.
Yeah. And I mean, like at that point, I had a decent sized rental portfolio. All of the properties were cash flowing heavily.
Yeah.
But still my GDS and TDS, which is gross debt service ratio and total debt service ratio, were apparently completely out of whack. I'm like, how is that?
Based on Canadian lender terms.
Basing on Canadian lenders, yes. So I had to go to something that is more conducive to somebody has bad credit, doesn't make much money. You know what I mean? Like it was just it was the straw that broke the camel's back. And so I said, okay, well, there's got to be something else out there. There's more than just Canada. If I can't continue to grow my portfolio or even refinance my own mortgage up here, something is definitely wrong. I gotta look for something else. And that's when I started looking at different markets, different countries. I looked at Sault Ste. Marie, for example. I mean, it's still Canada, but the prices at that point, back in the end of 2019, around there, they were still prices similar to what Hamilton was back in maybe 15 years ago.
And how far is that drive? Like 8
To
hours?
Sault Ste. Marie,
Yeah.
it was a bit. It was a bit. So
That's a bit. Yeah.
thankfully, I didn't end up going up there, because I mean they ended up with the same problem as we have, right? As far as
It's still
prices-
Ontario.
Yeah,
Still
it's all
landlord tenant
Ontario.
board. Same mortgage market.
Yeah,
You still run into the same hurdles.
yeah. Started looking
Not
at
hurdles. They're walls.
yeah, for sure. I mean, it's I don't know if the system is set up purposely to keep you from going beyond a certain level of wealth, but they certainly don't make it easy.
Right.
You know,
So I just want to paint the picture again now. So for listeners' benefit, again, Carlos is a professional financial planner, full time, owns his own financial planning office and mortgage brokerage. So you're well versed in how to make money in Canada.
people working for, you know what I mean? It was just, yeah, you know, I could have just kept cranking on that machine and it would have been great. But, you know, you, as an entrepreneur, you always want to reach for the next ring, right?
And reach for the next ring, but also make it as easy as possible, scalable, all
Yeah.
those sorts of things.
Yeah.
Kind of hard to do so in Canada,
Oh,
especially Ontario.
I ended up with the feeling that my country didn't really want me here.
Sorry, what year is this?
End of 2019.
Okay. It's gotten a little bit worse.
Yeah, I was really upset. I was really upset, and I ended up selling my practice, my portfolio. I wrote a book called Property Profits. If anybody's interested, it's on Amazon. If you go onto Amazon for whatever reason, you have to search Property Profits and my name. Property Profits alone will not bring it up. So, but yeah, 2019 was a big year for me, and as far as changes happened, never thought that I would have sold my financial planning practice, but it just came to a point that you know, after doing that for about 20 years, it writing was on the wall. I mean, you've seeing what was happening here in Canada, seeing what was happening with the financial industry, as far as the changes that were happening. At that point, they changed, you know, the licensing requirements for being a mortgage broker and doing private lending. They were changing the requirements for a financial planner, and you know, the kind of upkeep that you had to do to continue to have your licenses. You know, as far as continuing education and so on and so forth. So it was more, I was going to be doing more compliance work than being a financial planner or mortgage broker, right? So that was it, you know. And then with the potential for inflation, you know, what was going to happen with inflation and interest rates at that point, looking at my real estate portfolio, was like, you know what, it's a good time to get out of here. And as far as selling everything, and the last one that I sold, I had bought it it was a bungalow that I turned into a legal duplex. Did the work myself, you know, took some time off and did the work myself. Bought it in 2018, and then I sold it right at the peak, just before the downturn. And it was literally, if I had waited one more week,
Right.
I would not have gotten the price that I got for this house.
So you bought it 2018.
For $385, I put $60,000 into it to turn it into a legal duplex, and then I sold it for $1.1 million. Probably about 3 years later, 2.5 to 3 years later.
Yeah. So 2021-ish.
Yeah. So seeing that, took that money, went down south. You know, at that point I had kind of settled on Ohio as far as where I wanted to start investing in U.S. real estate. The prices were phenomenal, you know, in relation. I mean, I was looking at Toledo as well. I have a few properties there, which if you go into Zillow and you look up, you know, the real estate prices in the downtown core, not much gets over $80,000. You know what I mean? U.S. And excuse me. So, anyways, looked at Toledo, looked at Ohio, went to Cleveland, and you know, took a drive around there, saw the opportunity that was there. I mean, Cleveland is a market that is steadily increasing, and it's almost, it hasn't hit its stride yet, but you can definitely see this year alone in the price difference in prices from when I started to now. I mean, it's really ramped up.
Mm-hmm. I believe they lead the country in appreciation in a lot of Ohio markets.
Yeah, yeah. More so Columbus at this point. Probably more so because of the Intel plants that are going down there and a lot of the manufacturing jobs that are coming there. But yeah, no, it's a phenomenal market. Has an incredible amount of opportunity, but it's a double-edged sword as well. Mm-hmm. You really have to do your homework. It's not just about going in there and finding the cheapest property. Mm-hmm.
Oh God, that was formula for disaster in Hamilton.
What's that? Sorry?
You go find the cheap. I remember I remember meeting like people from my network who their investment philosophy was, if I don't invest much, then I won't lose much. So I'm gonna invest as little as possible, which meant you were in the worst neighborhoods for the worst quality housing. And by worst quality housing, as in like structural issues, and that's what they were buying.
Yeah, I mean,
like houses that were like leaning.
Yeah, and here's the thing. I mean, with Cleveland being 200 years old, some of those properties are, I mean, they've got bubblegum and duct tape holding them up, right?
So it's even worse than like the worst. Because like I don't think I've seen many properties over 120 years in Hamilton that old.
Well, at least they're brick.
Yeah,
for the most part.
I know, but they're like sinking and stuff. So before we get into market selection, how is the financing different? Would you have had I'm unintentional. No, I kind of intentionally leading. You mentioned was it 2018 that you're running into your financing issues?
2019.
2019, you'd have to do a mortgage that's meant for people without income.
Yeah. I mean, it was. Not only that, but the level of scrutiny from the lenders, what you'd have to provide, but not just once. It would get to their what's it called, like second level underwriting, and then you have to provide everything over again. There was one point where, I had to prove that my kids were actually real, like I had to prove that they existed. I had one lender, and this blew me away, asked me if I was cheating on my wife, because there's another Carlos Rodrigues in Hamilton, but when they pulled up the listing of, when they searched to see how many properties you have in your name, it was Carlos Rodrigues, and then it was another woman's name, and then there was all these other ones with my wife's name beside it. So rather than saying, "Is this you?" they asked me if I was cheating on my wife. I was like, "What?
What terrible communication!"
Oh, it was goofball.
Just Carlos, is this your property?
Yeah.
Rather than alluding to the next level. Like once you say it is your property, like who is this person also on title?
No, it was just goofy stuff. So, anyways,
and then just for listeners' benefit, like, lenders don't like us when we're that complicated.
No,
because that's a lot of work for the broker, the lender, to go through all of our documents. Like for anyone who has a lot of businesses, like, we have to present them everything.
Yeah,
and not only present them everything, they have to go try to read this stuff and understand it.
Yeah, and
so all this work for what kind of pay?
Oh, it was ridiculous. I mean, I couldn't get a mortgage, but the assistant I had at the time, she could get a mortgage, no problem. And I'm paying her.
Yeah.
Like, what is this?
Okay. So, and how would it be different in the States?
In the States, let's put it this way. Since I've started down there, okay, I have not been asked for my income once. As from lenders, okay? Yes, mortgage brokers and whatnot, when they're pre-qualifying you, they're going to ask you, obviously, these financial questions. But as far as using my income to qualify for a mortgage, I've never had to do it. because I've stuck with DSCR loans.
Sorry, explain what's DSCR loans.
I can't remember what the acronym is.
Debt service coverage ratio.
Okay. But basically, you're using the income that's generated from the subject property to qualify for the mortgage. So if a lender wants you to have, for example, $1.25 coverage for every dollar of expense, after they do the calculations out, if you net out at $1.25 per dollar of expense or better, they'll give you the loan.
Right. But also they only use mortgage taxes, insurance, condo fee for the expense. They don't
HOA,
include,
yeah.
I say condo fee, yeah. To give a Canadian audience. In the States, it's called HOA, Homeowners Association fee. That's their term for condo fees. We call it condo fees in Canada. But that expense ratio that the lenders are using doesn't include property management, repairs and maintenance, leasing fees, bad debt, all those other reality things. Just trying to explain to the listener. Yeah.
But I've also stuck to between duplexes and quads. Yeah. I haven't gone to the commercial side just yet, but from my understanding is it's pretty similar as far as the DSCR loans. But it's finding the right properties in the right areas for the particular strategy that you want to do. At this point, lending is kind of tightening up. So, for example, my first property that I bought in Toledo, it was a for sale by owner. They wanted to liquidate, and they were moving to Texas. I think they were from Toledo. So they had the house on the market for $60,000. It was 3 bedrooms, 1 bath. I was like, $60,000. Wow, it looked beautiful, little place. And well, hold on, I got them down to $45,000, which, I mean, and this was like the second property that I was going to be buying in the United States at that point. So my idea at that point was, okay, I'll buy it for cash. I'll put a couple of bucks into it to renovate it, get the property value up, and then refinance as much as I could out, and see how many times I can do this.
Yeah,
that was the idea, right? But what I didn't know at the time was lenders have a minimum loan amount that they need to have to actually make it profitable. And at that point, it was $75,000. Right. Sorry, $55,000.
Oh, okay.
As far as the loan,
right.
The value.
This is a very common thing for Canadians. They don't know this. They don't know about this.
Yeah. Well, I ended up finding out the hard way, because it's like $45,000. I mean, even if I do put 30% down on, which is the average that a lender is going to be asking for, right? 30%. It's actually, they've kind of moved it up to 35 now, but 30% on 45,000, it's peanuts.
You put it on your credit card.
Put it on my credit card, and how many times can I do that? I was giddy. And then the rents that I could get down there, that one was renting for, I want to say $1,200 a month plus utilities. I'd do a little jig every time rent would come in. And but anyways, I ended up, like I said, after I'd bought it, after I'd done the renovations, found out that, I got to get the value of the house to $75,000 or better. It got to $70,000. Like, shit. So for a while, I had a bunch of my money stuck in this property. Sure, it was cash flowing better than normal. It was still a 13% return, right? But I ended up finding out very quickly that you can't just buy anything that you want and make it work the way that we would normally make it work up here, as far as buying, renovating, refinance. So it becomes a problem, when for example, I'm working on one right now that we purchased it for. It was a property 4-bedroom house with 1 bath, in Slavic Village. This is an area of Cleveland. We bought it for $41,000. We put $38,000 into the property. At the time, the ARV was about 110, right, something like that.
So ARV would be like market value after the renovation,
right? So about 110 was what we were estimating. The appraisal, even before we did any work to the house, was coming in at 90,000. So I'm thinking we're safe, right? Well, things have changed now that they've pushed the value that they want to see for foreign nationals, right? And even though I have an E2 visa, I'm still considered a foreign national. They push the benchmark from 75 to 100,000. Well, it just appraised for 90. So we've got that 93,000. So we're $7,000 off the mark, and I mean the game plan at this point is to have it reappraised and see if a new appraisal comes back more favorable, because their appraisal rules are fairly close to ours, but there's stuff like. Well, I'm not sure if this is the case up here, but if it's a private sale, they won't use that as one of the comparables, right? I'm not sure.
Well, they don't see it on the market. The appraiser, because here the appraisers only see what's on MLS.
Oh, okay. Well,
right, so it's off market, then they have no trace. They can't trade. They have no record of it.
Okay, because down there, I mean, you can see both MLS and off market deals on Zillow.
Right. Oh, but also the appraisals here won't use off market because the property never went to market, so they can't use that as market value.
Okay, so I mean, we ended up finding that out, right? Because the comparables that we're hitting now, anyways, it's been actually a 5-month time frame since the time that we bought it until now. We had to get out the tenant that was in there. They even though we were supposed to have it vacant on possession, the tenant decided that they wanted to stay in the house. Mm-hmm. So Cleveland is kind of special in there. When you evict a tenant, you have to have certain certifications in place, like lead safe certification.
Sorry, what's lead? What's lead based?
Well, they have for example, they have a big lead paint problem.
Oh,
because the houses are so old.
Yeah.
Right, in certain areas.
Yeah, we have worse things in houses in Hamilton.
Yeah.
Sorry, continue. Asbestos is extremely common. So
yeah.
Hear lead, like, oh.
Yeah. Well,
it's not like people are eating the paint.
But didn't Hamilton have a lead paint problem?
I'm sure it is, but man, like I can't recall that being a red flag for insurance companies. There's always asbestos and, of course, galvanized steel.
Aluminum
knob and tube wiring. Aluminum was much easier to remediate than the aforementioned ones. Mm-hmm. But yeah, lead paint wasn't that common. Yeah,
down there it's a big thing. Any kind of flaking paint, you immediately fail a lead test.
Interesting.
But they'll come in, they'll swab for lead dust, and if they find it, then they'll make you remediate it. So it could get costly. But regardless of which. When we bought this house, we had just taken possession of it. So there was no way for us to have, like, this lead safe certification is something new that they've been bringing in for the last couple of years. And not every landlord has gone and got the lead safe certification. And part of the reason why there's so many properties on the market is because they don't want to do these lead safe certifications, right? So anyway, Cleveland now is kind of giving people fines, things of that nature. Mm-hmm. So you're going to see, a lot of this stuff. I would say probably 80% of the rental properties that are on the market right now that are older than 1970 don't have the lead safe certifications just yet. So,
and this is the importance of having market specific knowledge.
Oh, absolutely.
Real estate, like you've been around for a long time. I know real estate street to street. Yeah, I know these little fine minutiae.
Absolutely.
Because it's very costly if you don't.
And I mean, some of those mistakes, I made them and paid the price, to find out that information. But nonetheless, we're good. So, sorry, I lost my train of thought.
We're talking about lead paint.
Yeah.
Oh, and we're on the string of getting the tenant out.
Yeah. So, I mean, to do the test, we'd have to get into the property. So we'd have to give the tenant who doesn't want to leave notification that we're coming in, so he would leave. We'd have to come in with what's it called, locksmiths every time, to open up the doors.
Because he wasn't letting you in.
He wasn't letting us in, and I mean,
Wait, you didn't have a key?
no, not at that point. It's not the trade over when you buy a house there. It's not like you don't go to the lawyer and pick up the keys. You go to the other agent, and we bought this from a wholesaler who was in Texas. So who are we going to get the keys from, right?
Where was the owner?
He was where was the owner? Anyway,
That's probably a problem.
it was a while ago. I mean, just getting the keys was a problem. So we had to bring in the locksmiths every time. The cost was going up that way, but finally, in Cleveland, if you don't have the lead safe certification, if you don't have different things in place, you can't just go and evict the person, right? But if we had a newer house, that wouldn't be the problem, right? We could have just gone in a month and done. They're gone.
What an interesting wrinkle in the process.
It was a pain in the ass. And it was like they had we were victims of circumstance as well, because it was timing that certain rules had changed at that point, right? They were kind of moving more towards the tenant, as far as being friendlier to the tenant. Yeah. And so anyway, that it's just kind of like the perfect storm that really pushed out our timeline from getting in there right away to do the renovations and putting this on and getting everything done. That either the value of the real estate in the area had fluctuated enough, or those comparables that would have helped us were now outside of the window that you could use for the appraisal.
Right, and you need the certification, lead certification, otherwise you can't evict.
Exactly. So finally, we get them evicted, get this thing renovated, and unfortunately, it's just shy of $100,000. Probably because of what's happening in the economy now, lenders are tightening up on their criteria. So if we want to get a loan to, one, get our capital back and keep this long term, we have to get this house somehow to $100,000 or minimum in value. So
it's a couple hurdles. That one's not that bad. Now, we do have a lot of Ontario, BC, and Quebec listeners. I'm sure they'd be interested in what the tenant eviction process looked like. So you need your lead certification. What else did you need before you could start the legal process for eviction?
Well, you serve notice, and sorry, normally my property manager takes care of this, so I haven't really got the process down pat. But generally speaking, it's there's a 30-day notice, then there's a 30-day notice to leave. Then there's a 3-day notice that goes out. Once those are done, then the lawyer kind of takes over, and you apply to the courts to have the eviction done.
And this is courts, right? This isn't.
There's no landlord tenant boards. No, there's no tribunals. None of that.
Yeah. There's no division of government that's there to protect the tenant.
Yeah, no, it's all done through the courts. Yeah. And I mean, it's very quick, as far as they set the date for the trial. Both sides present their case, and I mean, 90% of the time, there's no tenant that gets involved in the eviction process.
Yeah, because they have no leg to stand on.
They have no legs to stand on, and frankly, the way that Ohio is a red state, so the mentality down there is if you're out of your lease and the landlord wants you out, you're pretty much leaving, right? One way or another. So anyways, the judge rules in your favor. And the next thing is there's typically a time frame that the tenant has to pack up their stuff and leave, or the sheriff is coming in on a particular date, right? You pay for the sheriff. It's about $300. And then if it gets to that point, they move them out.
Yeah. And we're just talking like if it gets to that point. Usually they just leave because they know they have no leg to stand on.
Yeah, I mean there are those times. I thankfully have never had to experience this, but generally speaking, we kind of say to the tenant, "Listen, it's either you move on your own. We'll give you X amount of time to move out on your own, or the sheriff is going to move you out forcefully.
Yeah.
We'd rather not have that."
Yeah.
And they're gone.
Yeah, because who wants armed enforcement to come into their property and physically remove them?
Yeah.
Especially their kids.
Yeah.
No one wants to subject their family to that.
Exactly.
But that is the process.
Exactly.
And what would you think? Like, how long until a sheriff comes from beginning to end?
From the time that from the time that you start the eviction process, normally is 3 weeks at its fastest, right? 3 weeks from start to finish, right? Can you imagine that here?
So, listener, 3 weeks.
Yeah.
Professionals are reporting in Ontario that's 7 to 7.5 months for enforcement.
And this is part of the reason
And that's
why
professionals. So mom and pop investor, you're much longer than that. Like you and I are mom and pop investors. We don't have the same resources that the REITs do.
Yeah.
In Ontario.
No, I mean, just from a legal perspective,
oh yeah,
they have so many more assets available to them.
Yeah.
But
also the way that the market is now for tenants, like I think it was in the news, one tenant had 3 appeals. So the eviction order was given. They appealed it 3 times. Successfully.
I'm surprised there hasn't been anything in the news about some landlord going out there and taking matters into their hands and shooting them.
But then it's also the news to get arrested. So, and with like no violence, just like removing the door, for example, going into the property, and then they get arrested. So that's
I don't know. I if you can't do it within the rules, it's becomes a real problem.
Vigilantism, which is not what. Yeah, but people are desperate, right? Like imagine going a year with no rent,
especially if you have something in Toronto or Vancouver.
Or anyone in general.
Just $30,000+. I mean, I couldn't imagine that stuff. Mm-hmm. Thankfully I never had to. Well, in 15 years of investing in Canadian real estate, I only ever had to evict one tenant. Mm-hmm. And that was before the problems with the landlord-tenant board.
Yeah.
So thankfully I'm out of there.
Yeah.
And I don't know, unless things change as far as being a landlord in Canada, I don't think I see myself ever buying something up here again. Maybe to develop, but the world has so much else to offer. I mean, was Canada 2% of the world's economy?
If that,
right? So,
and our economy struggling compared to like the bigger economies in the world.
Sure. I mean, I'm not saying the American, real estate market is the best, but it offers so much more opportunity as far as just sheer numbers. Mm-hmm. I mean, yes, you might have competing offers on a particular property, but I mean, access to different lists as far as, property owners that are delinquent on their taxes or
water bills.
Water bill. I mean, it's I guess a double-edged sword that in the United States there's no real privacy.
Yeah.
If you really want to find something out about somebody, it's a matter of maybe paying a fee.
Yeah.
But it's how much they owe on their taxes or.
It's way easier to do off-market deals in the States for good value.
Oh yeah.
And even before we get to that, you touched on how Ohio is a red state. I don't know if it was on the recording, but you mentioned Intel, and then being in business-friendly state, they attracted Intel to build their plant. I forget what the dollar is. It's in the tens of billions of dollars, I believe, for investment to create thousands and thousands of jobs. And also Honda is building a plant west of Columbus as well. So this is all happening before today's time. Like I believe both plants are already open and hiring people.
Oh, really? Already?
I wouldn't be surprised because I believe those announcements were back from like 2020, 2021.
Yeah.
So it's been some time. Like most of the auto plants that were announced back in like 2020, 2021 have already opened doors into hiring. So I wouldn't be surprised if Honda's already hiring.
Yeah, and the values of properties at that point, I mean, they shot up as soon as that came out.
Yeah. I saw that in the when I was researching Columbus.
Yeah.
Intel.
I mean, Cleveland's got the Cleveland Clinic, you know, a monster of a hospital. I mean, it makes McMaster University look like a peanut.
Where I was going though was that most Canadians who follow real estate investing knows what like a Honda plant did for like Alliston, Ontario, for example. It's been everything to that market. So Ohio has a new Honda plant and they have a new Intel plant, which and those employees make even more money. Like you're talking like white collar people. I believe the average salary for an employee at that plant is like 135,000 American.
It's crazy.
Yeah, but they're microchip manufacturing. These people are very smart and very high educated.
Yeah.
And then the other side of it is how many people are qualified for those types of jobs. So that just means wage inflation.
Yeah.
And also when you're offering that kind of money, you're going to imagine people are willing to move to that area. And if they're moving to that area, they need a place to rent, maybe a place to buy, right?
Well, this is another thing that I read recently was that the younger professionals who are getting priced out of the coastal cities, you know, LA, San Francisco,
New York.
whatever, they're all coming to the interior now, where prices of real estate are a fraction, you know, of what they're paying out in those markets.
Yeah, because I remember I was researching Columbus, just around the Intel plant, like 3,000 square foot houses are like 350,000, and they're quite new, like built within the last 3-4 years.
Yeah, I can imagine.
And then like I don't know what the definition of the American dream is, but it sounds pretty good to be making 135,000 and you can own a 3,000 square foot home for like 350. Right? That's not even 3 times your income. Like you're a financial planner. Who can do that in Canada?
Yeah, nobody.
Who can own a home for 3 times their income?
Yeah.
And also we're talking about one income. Right? Now your partner can not have to work.
Exactly.
And that is freedom.
Nobody has to build an ADU in their backyard or, you know what I mean, to make it cash flow or do, you know what I mean? Whatever.
We don't have to wait to 55 to have freedom, financial freedom.
Yeah, right.
Right?
Yeah.
Like find me that in Canada.
Yeah.
Right? Sorry. So let's talk.
That's why I went down. I mean,
Now let's talk about going down because just like when you start investing in locally, you had to build a team. So build a team to me means you need a realtor, you need a wholesaler, you need a property manager, preferably multiple of each, because in case you need to go through them, you know, there's no reason to just have one wholesaler in a market, no reason just to have one property manager in a market. You need people to fix stuff, right? So tell me, how was the team building process when you first went down to Ohio?
brutal. Brutal. I mean, it's you know, you first you got to get over that fear of, you know, who am I going to pick? You know, the people that you vet. I mean, my first property manager stole $30,000 from me, and you know, I don't consider myself uneducated. I mean, I know how to vet people for the most part, and he still pulled the wool over my eyes. You know, this guy had you know, government contracts. He had errors and omissions insurance. Supposedly he had errors and omissions insurance. You know, it was just, the list goes on and on and on. And then it came to a point where people were coming out of the woodwork after he you know, took my money and took off.
And that was months. Like, so you were working with this guy for months. He's wasting
Oh
your
yeah.
time. Right.
But you know, I'm not going to go through the whole story because it'll take quite a bit of time. But basically, I ended up finding people online from all over the United States, doctors, lawyers, police officers. I mean, that this guy had stolen money from.
So I'll steal from a police officer. That sounds dangerous.
Well, I mean, a Cleveland police officer, yeah. And frankly, I don't think I've ever had a worse interaction with a police officer than one in Cleveland. But and they basically said to me, they couldn't help because there was no violent act when he took the money, right? Even though, you know, my lawyer is sitting there pulling his hair out, going, you know, at what point how much money do you have to steal from somebody, whether it's with a smile or a gun? does it become a crime? And anyways,
To be fair, white collar crime doesn't really go punished here in Canada either.
but we were finding so many people that at one point I had a Facebook fan page of everybody that this guy had taken money from, because we were trying to find him, and right now he's on the run. But to give you an idea of what he's facing with me alone, in the real estate board, if you're a property manager, you have to be licensed.
Mm-hmm. It can be very common in the States.
Yeah, for residential, for any kind of property management down there, you have to be licensed. Up here,
licensed realtor.
Yeah, a licensed realtor. And if you're not, and putting your services out to the general public, you could be charged $1,000 per infraction that they find per day. So this guy has 116 infractions with me alone. Like, he's toast, but we ended up putting a lawsuit in, and just kind of just so there was a stop, right? And anyway, we know that he's on the run from the authorities and other people, really, through our investigation of what's going on now. But he's in the wind, and his name is James Jennings. And if anybody comes across James Jennings, let me know where he is.
Now, I think you told me that you had to interview several property managers before.
Went through a bunch. The team that I have now were through referrals from other individuals down there that work in the real estate market. I believe the property manager I have now came from a mortgage broker that I was working with.
Can you explain why the challenge in finding a property manager?
It's a good question. I mean,
we have that here in Hamilton and most markets in Ontario as well. There isn't a whole ton to choose from.
Well, down there, the sense that I get is that they're either incredibly bad or phenomenal. There's no in between, right? For example, because they have to be licensed realtors, a lot of the brokerages will offer a property management. But as a realtor, you make your money selling houses. You don't make your money managing properties and filling, doing leases, for example, at least up here, right? So the same is true of Cleveland. So you get less attention from the person who's supposed to be taking care of your property.
Right.
And anyways, I ended up trying, different avenues, and finally found a person who took her job very seriously, communicates phenomenally, and I consider her my right hand down there. Anything that needs to be done, she's on it. Somebody that's proactive, because I do a lot of subsidized housing, the Section 8 program that they have down there. There's annual inspections that we have to do. And, if you don't have somebody that's proactive going to the house saying, okay, we need to address these issues before the inspector comes in, you could have, a period of time with no rent, right? So very proactive team that I've found, not always the cheapest, but, sometimes you got to pay for quality.
Now, I've heard many nightmare stories locally around government subsidized both housing and also receiving tenants from government institutions. Why the decision to do government subsidized housing in the States, which is generally called Section 8?
Yeah. Section 8 tenants, these are people, there's nothing wrong with somebody who might not have the same amount of money as the next person, but you still have to vet them, right? So how it works down there is that they'll apply for subsidized rents from the government. If they get it, they get a voucher that says that they can rent up to X amount of bedrooms. Okay, depending on the size of their family and their income, will dictate the voucher that they get. and basically it's set up so that people with lower incomes can really go and live wherever they want within reason, right? So as a landlord, you know, when you're putting your property out there, I mean, the benefit to having the Section 8, first off, is that rather than the rent being paid to the tenant and then to you, it's coming direct from the government. And down there, as opposed to up here, the tenant can't stop that.
Which they can here.
Which they can't here.
In Ontario, they
Right.
can.
So
If anyone wants to disagree with us to let us know that's not true, please write in.
yeah. Well, I found out firsthand. You know, I had the tenant that I unfortunately had to evict.
Yeah.
I had that problem with them, that you know, we were doing some work and they didn't want the work done, so they decided to cut off the rent being paid to me directly here. So anyway,
And this was the Hamilton, you mean?
this was in St. Catharines.
St. Catharines, Ontario.
Yeah. But in the States, I mean, they have a certain amount that they'll qualify for. In Cleveland, it varies depending on the zip code, and then how many bedrooms are in the property. But generally speaking, the Section 8 rents tend to be between 20 and 30% higher than the market rent.
Yeah, because the government wants to entice landlords to rent to these people.
Exactly.
That needs government subsidized housing.
Exactly.
Yeah.
This is, I mean, like I said, you still have to vet these people, right? But normally, somebody who's in the Section 8 program, if you have to evict them, they lose their voucher. So they
Forever.
Forever, yeah. Well, I'm not sure if they can reapply or not, but
Even if they have to reapply, they go to the back of the line, which could
Exactly.
be like 2-3 years.
exactly.
And for listeners' benefit, it's typically around 75% of the rent.
Yeah.
Is how much the government is subsidizing. And I think that's just interesting as well, that we're the socialist country, yet the Americans are giving people who need government assistance housing up to 70, like on average 75% of the rent.
Yeah. I have.
So for someone to trash your place, they're giving up a lot of money.
Oh yeah. Oh, for sure.
They're giving up 75% of the rent. I feel I should trash this place. I don't need 75% of the rent.
I mean, you can still get that. You know, there are still people that
It still happens. People with mental
absolute
health.
animals,
Yeah.
and will destroy a house. But
The financial incentives are not there.
Exactly.
the negative financial penalties of losing that 75% financial subsidy. Again, I'm talking about average. That's not everyone's subsidy, but that is a significant amount of money.
Absolutely. So I ended up going more so with the Section 8 tenants because, you know, if we ever have a pandemic or another recession where, you know, everything takes a dive, I'm still getting my rent. Right? Nobody's losing their. I mean, even if they did lose their job, the government is still making up for what
A
they've lost.
good portion of it.
Absolutely. So that's basically the Section 8 stuff.
Can you talk to how long it takes to get a property ready for Section 8? Like,
Well,
if
this
you-
is
if you
where
buy
the
a Section 8
bureaucracy comes into
Okay.
play there, right? It's like they have their voucher, but when you have a property, before the tenant moves in, Section 8, where every municipality has their own kind of entity that deals with the Section 8 program. So that entity will come in, do the inspection, but just setting up that inspection can be an issue, right? As far as how many do they have ahead of you. You can't have the inspection and then look for the tenant. You have to have the tenant and then they'll come in and do the inspection.
oh crap.
Yeah. Otherwise, it would save a lot of time if we could just, okay, we're done our renovations, come in and check it out.
Yeah, certify us for this.
Doesn't work like that.
Oh, that's not even good for the tenant either, because they may not get the house.
Well, I mean, we've had tenants that have had to, they give their notice to their landlord, their previous landlord, and then they have to wait a month, maybe 2 months sometimes, right? But anyway, it becomes a real bureaucracy in there where you're dealing with the caseworker for the tenant, and you know, just kind of trying to move this along quickly.
Right. So what's your experience been like from like posting the place available to rent to?
The longest we've had from the time that we've got the tenant
Yeah.
and got them in is 3 months.
Oh, damn.
Yeah. And you're not getting rents in that time period.
Yeah, of course not.
Even like
And that's on top of your like your renovation period, and so
exactly.
because you can't. Well, you're not going to pass with a renovation. You're probably not showing it until your renovation's done. So
Depending on the municipality, like for example, East Cleveland, okay, they have what's called a point of sale inspection. So when you buy the house, okay, actually, if I was putting up a house for sale, the city is supposed to come in, do an inspection, and give you a list of all the deferred maintenance that they have, that they see on that house. Stuff like cracked sidewalks, cracked driveways, steps that are out of code, for example. All these, every little thing, depending on your inspector that day. I mean, you could have a very short list, or you could have a monster of a list.
Mm-hmm.
And before the next person, either the next person coming in who buys the house, or you as the seller have to take care of that list before anybody else moves into that house.
Mm-hmm.
So that's one inspection, right? You have to if there's permits to be pulled. I mean, down there to replace windows, you got to do permits.
Seriously?
Yep.
Windows?
Windows. Okay. If, for example, I had on one property.
I've never heard of that anywhere.
Yeah.
I can't think of anywhere you need to pull a permit for a window.
You're supposed to pull permits.
Unless it's like a historical protected. Yeah.
Yeah, no. Down there, anything beyond paint, really, you're supposed to pull a permit down there. So
replace the furnace?
I'm not sure about
Shingles?
that. I'm not sure about the
Unlikely.
HVAC, but it gets pretty rough. It can get pretty rough. A lot that they like their bureaucracy, man. But from the time that you finish renovations to the time that you get you find the tenant, the longest I've ever taken to get that tenant into the property, passing all the Section 8 inspections and whatnot, has been 3 months.
Yeah, so
That's
this show.
The fast, yeah.
This is the truth about real estate investing. We're not here to candy coat anything. We're here to tell you realities of people's experience.
Yeah, there's reasons why we have gray hair. So it's but aside from that, once you can get past the bureaucracy and I mean, there's no rose without a thorn, right? The Midwest has an enormous amount of opportunity, whether it be development, whether it be, if you like doing the burr strategy, just turnkey. I mean, you can go down there.
You need turnkey too, yeah.
Turnkey property, get a house cash flowing really well. It's cap rates of 12% are not unheard of. You know what I mean? I have some properties that the ROI is 40+% in a year. It's
but not without work, as you've explained.
Oh, for sure. I mean, everything. It all. There's definitely work. This is not a passive cash flow scenario.
Yeah. And for example, how often are you on site? How often? Because you live in Hamilton. How often do you need to make the trip to Ohio, and how long are you there for?
I generally will go every other month. It's needing me to be down there a little bit more often than not because of all of the projects that we have going on construction wise. But I'm trying to put some stuff in place that will, allow me to see what's going on down there and not have to be physically there. But nonetheless, I like to pick up the tools every once in a while and get dirty.
Right. And you're allowed to because you have an E2 visa.
Yeah. Not just anybody can go down there and start working.
Right.
If you show up at the border with a bunch of tools in your car.
Oh my God! These days, you're crazy if you try to do that these days without proper permits.
Exactly. So I mean, with the E2 visa, I've been asked every single time, anyways. Why you got so many tools in the bag? You going down there to work? It's like, do you have a visa? Yes. Here's my E2 visa. You know,
And then after that, school.
piece of cake.
Oh, okay.
Never had a problem.
How hard to get an E2 visa? Not many people have it in my circles.
Well, let's put it this way: I wouldn't apply for it by myself. With the amount of investigation that they do into your finances and your background, I would definitely get an immigration lawyer that looks into that stuff.
You have one you recommend?
Yeah, Kate Alonzi from Viz America. She's fantastic, reasonably priced. I mean, it is a fairly decent investment that you're making just for their services.
Right. Ballpark?
I
How much
believe
time
from
and money?
start to finish, I ended up putting in about 17,000
American?
American.
It's funny. I was just in the States, and the Americans are always like, Canadians always ask that. Is that American dollars? Whenever they give
They're
a
not making
dollar
the conversion for you.
No, they're not charging Canadian.
No, you'll be lucky if they say please and thank you. Never mind.
It actually goes back to like what my original thing about like what a financial planner would say. Like, I've said this in the world as well. And again, you're a professional financial planner. You are a professional, or were? Do you still have your designations?
No.
All right, but you were. I used to say it all the time. Go poll 100 people outside North America. Will you take Canadian dollars? And ask them again. Ask them, will you take U.S. dollars? Like, who's going to say they take Canadian dollars
Exactly.
if you're outside North America?
Exactly. Even Cuba, you go to Cuba and they call it the enemy currency. We will accept the enemy currency.
Right. So let's take the enemy currency over a friendly currency, Canadian currency, and that goes to my point when people think I'm crazy to diversify. Like, who's crazy? Who's crazy, Carlos? We're the crazies. Well, it's fine for the crazies. Lumping you in with the crazies. Sorry, Carlos.
Crazy people don't know they're crazy. So
Jobs called him crazy. He lumped himself in. Steve Jobs lumped him in with the crazies. So we're running out of time. So I want to ask you, what's Carlos doing going forward, real estate investing wise, anything wise?
just trying to build the portfolio down there that I couldn't build up here. And now that I've sold all my practices, this is what I do full time. And other Canadians who want to start investing down there, but don't have the time to be putting boots on the ground and still want to take advantage. That's where I come into play. I help them set up the different entities that you need to properly do your taxes. So you're not getting double taxed.
I know a good accountant if you need one.
Yeah, right. Does she do American taxes as well?
Yeah.
Oh, awesome.
And I think it's quite rare to find a Canadian accountant that does U.S. accounting
Incredibly
as well.
rare.
Yeah.
Yeah.
And well, very common among the big 4 or 5.
Yeah, right.
But from my friends, though, like their Canadian taxes are done by the Canadian organization. The U.S. is done by the U.S. organization.
Okay.
So it's still like not quite the same versus having it all under one roof like we have here.
Yeah.
Yeah.
Well, one person looking at both has its advantages.
Yeah. And then also we understand finances both here and there. And it's just me that I say a true CFO understands both taxes and lending, because that's how, like any public company CFO, they have to understand capital markets and of course taxes, right? So yeah, sorry.
What was I saying about the?
You help your clients set up legal entities, including how they're going to handle the U.S. taxes.
Yeah, through whether it be a mentorship that some people don't want to get involved with my projects, but I do either joint ventures or a mentorship program. But essentially, we get them set up down there. I help them through their first couple of purchases, their first year. Those people who want to continue on with the joint venture, we continue to build the portfolio together. But I'm pretty much involved from day one, and I feel like I'm missing something.
It sounds like you literally tour guide people.
Well, and that's it. There is that we'll do tours every so often first,
and you start from here, as in like your client that you're taking out, you're literally picking up from Hamilton.
Well, that's a special thing for this particular tour.
Okay.
But normally,
Because you're a friend, you're already close. Sorry.
Yeah,
So that's not for everyone. That they can meet
No.
you at your home and you'll drive them to Ohio.
No, we're meeting at the hotel in Cleveland, and generally speaking, it's normally on a weekend. Travel day is Friday. Everybody gets settled in, and then come Saturday morning, nice and bright, 8:30 in the morning, we meet, get on the bus, or now we're doing kind of smaller groups, and it tends to be a better conversation.
Yeah.
But there's typically about 12 of us that go on these tours, and we do probably about 14 properties in a day. We meet with my realtor down there, and sometimes parts of the rest of the team, but we'll see the good, the bad, and the ugly. And typically, what is it, on either the Friday or Saturday night, we go to one of my favorite restaurants down there. We have a nice seafood boil, which I'm looking forward to tonight. But it's so if you don't like seafood, don't come on my tour.
I'm sure they have other things on the menu.
Well, we had a vegetarian one time that came with us, and anyways, he had fun. So,
And where can people find more information?
Best place to get me is actually on my Instagram.
This one?
That one right there, at Cashflow Carlos. There's a link there. See.
Yeah. So no special punctuation, it's just cash flow Carlos.
That's it. There's a link tree. You can join my email list. That is, generally speaking, where you're going to get the most information from me, is the email list. I'm still struggling with posting on social media on a regular basis.
Oh, but you're on TikTok. That's a TikTok logo there.
Yeah, I haven't posted there for a while.
Oh, okay.
But and actually, that might come down shortly if they ban it in the States. Isn't it supposed to be banned now?
I'm sure
that
they'll figure out something.
that 90-day reprieve is up.
You think some of Trump's friends would gladly buy it for a deal?
Yeah. Whether China is willing to sell it is a different story.
Yes, that is the other side of it.
Right.
Yeah, that'd be interesting. That's an interesting conversation, and that's not going well.
No. If you do go on to Facebook to find me, it's Cashflow Carlos Official. Because unfortunately, I had my account hacked, and that's it there.
Fantastic. Thanks so much for doing this. I know we're keeping you from your client that you're going to take to Ohio today. Any final thoughts? Any final thoughts for the listener?
If you're going to do it on your own, take your time. Don't be in a rush to pull the trigger, because it is a different beast. It's you definitely need to do a lot more homework than we did up here in the GTA. If we have to buy a house up here, if the numbers work up here, you're generally making money. Well, the numbers could work down there, but other factors could really take away from your investment. So you don't want to be finding out the hard way that you've bought a money pit, for example. And area, location definitely makes or breaks you down there. Don't be afraid to spend a little bit more money on a purchase, because buying a turnkey property on your first one definitely allows you to get in, but it saves you from some of the horrors. So.
Yeah, that's a good place to finish it.
Or just call me.
Or just call you. Cashflow Carlos on Instagram, at Cashflow Carlos Official on Facebook.
Yep.
Thanks again for doing this.
Thanks for having me.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover, or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social social media, reply to this email that this has arrived on. I'm not hard to find. You know, we're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.